Hey, what's up, traders and investors? It's your good buddy Brent coming at you on Thursday, February 2nd, 2023. It has been maybe a couple weeks since I made a video updating on the paper trading account. Boy, let me tell you what, you know, do you remember how we kept looking at uh, Apple? How Apple had this naked call option sold on Apple, and I was talking about these different it's kind of like in these different layers of kind of like $5 layers of support and resistance, and if it got up to around somewhere in the 40s, I'd have to look to start covering it. Do you remember that? Hey, if you don't remember that, it's not a big deal at all, because it has definitely been a minute, but I did. So now I have a long 100 shares of Apple, and I went long at 143.99. And is this what's this? What is Apple currently trading at? 145. So when does my contract expire? That looks like it expired. Guess I should have been watching a little bit closer. Maybe when did I buy those? When did I buy these? I bought these on the 31st. Okay, so, and it expired, maybe it expires today. I'm not sure, but I'll be ready, right? I'll be ready in case, okay, it expires tomorrow, right? Expires tomorrow, the last day. And so I'll be ready if, in case Apple goes over 150 tomorrow. If it closes over 150, then I have the 100 shares to deliver. Now let's say if it doesn't go over 150, then what I will do is yeah, maybe I'll sell at, whoa, looks like am I mistaken? Let's take a look at that's the mark. 145 chart showing it closed at 150. So I have a feeling it's going to close over 150 tomorrow, but I'm okay no matter what happens. It closes over 150. I got the 100 shares to deliver. This is no longer a naked call option. It's a covered call option. And if it stays under 150, then I might just sell these shares at any profit that I could get, which right now would be about 200 bucks. All right, no big deal. It went from a loss to 200 bucks, but it took $14,000 to do that. And per this class I'm taking, I sold a deep in the money put. I sold a put at a $180 strike price. That's going to expire on when does that expire? You know what I'm going to do? Let's see if I can close that out. What did I buy it for? I bought it for 36.85. And do I have a limit order set up on it? 36.85. Let's see if I can just good to close that out and bring in wait, let me double check what I'm doing. This is definitely good to do, right? So deep in the money put, I'm up. Yeah, I'm up. Okay, that's what okay. I sold it for 36, and I want to close it for a little bit less. Let's see if I can close it at the mid over here. There we go. That's better. So that'll give me about a $600 profit if that goes through. All right, send that in. And okay, so hopefully that'll be dealt with. This is going to be dealt with. What I learned about selling these per the VIX trades, this one, all per the VIX. And at 5 minutes, get ready. It's coming at 5 minutes. There's going to be a video popping up right here. You can learn about that trade. Boom, right there. It just popped up. Just remember 5 minutes. You can come back and watch that later. It's actually going to be a link to video number 2, which will link you to video number 1. Why is it that way? It is that way, my friends. You know what? Your good buddy Brent ain't making no money doing these videos, so you know what you get for free? Get what you pay for, all right? So, yeah, working 9 hours on the floor today, training some people. So a little bit tired, and that's what's been going on. I know that video it's been linked up wrong, but you know what? I don't give a rat's tail. So anyways, so I would have closed these out. With hindsight, what I learned, you got some profit with that VIX trade, you close that bugger out quick. Because look at this. No profit. I'm in the negative here. No, negative. Yes, came up today, but overall it's in the negative. Look at all this negative. At one time, this was $2,000 profit, and I didn't do anything with it. So this one got a little bit of profit, and what's going on here in the negative. But I'm just going to let them roll because just to continue to see what happens. Futures trade. This one never it never actually went through. Try to put a strangle on. When did I initially do this? You know, it was a while ago. So I have been, and I had food poisoning. I had all types of crazy stuff going on. Long hours of working. So we're just going to cancel these. Cancel these orders. Get those out of there. Short stock, still got that same thing. Long stock, what do we got? Same thing. When was that placed? Look at this. Time placed. 18th. Cancel. Cancel. Get out of there. These two, same thing. We're just canceling these orders. Canceling these. Not going to place any new ones right now. But what I am going to tell you about is in the description of this video, there is a link to ihavesuccess.com. There's also a link to a playlist, Trading Options for Beginners. And this illustrates, right? See all this extra work? There's a lot of stuff going on here, right? And it illustrates the power of selling cash secured put options on stocks you don't mind owning. Because look at all this extra work I got to do with all these, right? Had to turn a naked call into a covered call. Losing money here, should have closed those already. And that's really the big thing, right? So there's upon option expiration date, there's generally two things that can happen when you are doing most option trades, right? You either make money or you lose money. That's generally what happens. And so number 2 doesn't sound very fun, does it? I don't know of anyone that would legitimately enjoy losing money. So then what you do when you're selling cash secured put options on a stock you don't mind owning, then the beauty of that is your outcome on expiration date, right? You go from making money or losing money to making money. So here's the premium, right? You sold the option, you took in premium. If the option expires worthless, you keep the premium, right? If I sold options, I took in premium. If certain conditions happen, I keep the premium. If certain conditions happen, I lose the premium with most of those trades. Selling cash secured put options on a stock you don't mind owning. Option expires worthless, I keep the premium. Option does not expire worthless, I keep the premium and I keep my promise. To buy assets. See over here, what's basically going on, I'm making, or you, when you are selling options, you're making promises. You're making legal promises. And with most option trades where you're selling options, you're basically assuming that you don't have to keep your promises. If you're forced to keep your promises, that's generally when you lose money. So when you're selling cash secured put options on stocks you don't mind owning, your option expires worthless, you make money. You need to keep your promise, you make money. And your promise is to buy at least 100 shares of a stock, which means then you have a minimum of 100 more paper assets. Now, if you use kind of the formula that I use, which I show you in those different links, you end up buying paper assets that produce dividends. Now, you might be wondering, what is this box that you have over here? This is your financial statement. This is your income column. This is your expense column. This is your liabilities column. This is your asset column. So with these trades right here, money either flows, and these are like, let's say, conventional option trades. Maybe conventional is not the right word, but the majority of option trades, you get in this win-lose situation. You either win some money or you lose some money. Now, I get it. Some people could say, well, you could break even. Well, we're going to lump break even over in the win, right? Because if you walk away with the same amount of money you started with, I would consider that a win. So with this conventional type of option trade, money either flows into your income column, right? That's one possibility. The other possibility is that instead of money flowing into your income column, money flows from your income column to your expense column, and it's expensed out of your financial statement. And that would be if you're getting close to, you need to keep those agreements when you weren't really planning on it. Like, your plan is that you don't have to keep the agreements, you just keep the money. But when it comes down to, oh, I got to keep my agreement, so sometimes you have to pay your way out of that agreement. So money flows out of your financial statement through your expense column. That's generally how most option trades are going to be. But when you're selling the cash secured put option on a stock that you're happy to own, the option expires worthless. Guess what? Money flows into your income column. You can continue to write cash secured put options, and maybe, let's say you write 3 months of cash secured put options. You get 3 months of money flowing into your income column. Now let's say on the 4th month, your option does not expire worthless. Well, this money that you took in as premium, guess what? That still flows into your income column. And now these assets that you bought get moved over into your asset column. And if you're following the guidelines that I use myself, which I put into those downloads and everything you can get in the description of the video below, you'll be receiving a dividend. And usually, like every quarter, money from your asset column is going to flow into your income column. How about that? Now with these, which I still do these, right? But I learned over time, like I don't like money flowing out. I don't really like that, especially when, there was a time when I was running kiosks in the shopping center. I was working basically, I don't know, sometimes like 70 hours a week, basically 7 days a week, sometimes longer, sometimes a little shorter. But for the most part, I had a lot of money flowing into my income column from a kiosk. So my option trading was kind of secondary. And I hated losing money from due to like not paying enough attention. Employees calling me, hey, I can't show up to work, and then I got to cover their shift, or, oh, so-and-so, there's a big problem down here. Next thing I know, I got to run down to the mall and fix a problem, or, whatever the case may be. So over time, I realized, I was like, hey, wait a minute. There's one form of trading that upon expiration, I win no matter what. I either keep the money, or I keep the money and I get an asset. And then from there, I can start writing covered calls or whatever. So if you really understand this, then you're going to be like, you're going to want to learn how to do it, right? Because if you're going on vacation, you don't want to be putting on some trades like this where you got to worry about doing adjusting and stuff. Maybe you want to, right? Maybe you do. I think a lot of people, they would rather do this. I know I don't want to go on vacation or go to a place where there's not good Wi-Fi and have trades like this. I'd rather have trades like this. So I just like, I don't care. Check my phone. What's the price of such and such a stock doing? Okay, it's above the strike price. Okay, it's below the strike price. I'm happy to buy it there, right? I like life like that. And so with that, you learn how to sell cash secured put options. Then you can do like maybe somewhere between, I don't know, 80 to maybe 90% of your portfolio with like something like cash secured put options, high probability of success. You know, it's you're trading off ROI for high probability. And then, you know, maybe with about 10% of your money, 5 to 10%, let's say 5 to 10%, you're doing like higher, maybe higher risk, maybe you could call it that, or at the minimum, higher need to maintain, higher maintenance trades. You got to pay attention. If you don't adjust them, there's a possibility you're going to take a loss. And the math doesn't really work out, right? 80 to 90, 5 to 10. So there should be a little extra money. So maybe somewhere between 5 to 10% of your account, you don't do anything with that. You just leave it on the side for cash. In case you got a hedge, in case whatever. Just to have it on the side. Or if you want, whatever. You go 100% in with whatever you want. It's your money. Just don't blame anything on me. This is not financial advice. I told you got to talk to every politician in every single country, and you got to talk to all the religious leaders. You got to let everyone else make your decisions for you. You are not capable of making any decisions on your own. You better check with all the experts, all the people that have no interest in your money other than taking it. Okay, just kidding. I think you should learn how to think for yourself. With that, ladies and gentlemen, okay, so I adjusted this Apple trade. It is no longer a naked option. These other ones are all just losing a bunch of money. So that's why you should paper trade, right? That's my advice to you. Paper trade so you can learn how to depend on yourself instead of relying on the suspect opinion of other people that have never met you and don't care about your money as much as you do. With that, aloha.